please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. The markets are down about 12 odd points. And you can point to the overnight Wall Street session and say, well, but the Dow was up 400 points. The fact also is that the Nifty from last Thursday's lows, that lows on the 22nd of this month, essentially is up about 250 odd points or so. The Bank Nifty, even after basically giving up all of yesterday's gains, is still up about 300 odd points or so from last Thursday's lows. So there is a bit of give back which is happening on the market, despite the strong session that we've had in the overnight US market session. There you go. I mean, the PSU Bank, the Nifty Bank, etc. What, of course, is also troublesome is new news flow on PNB, which we've kind of spent time since the morning talking about. And there's constant fear that maybe there are more skeletons in the cupboard. So PNB is back to, it's actually getting to double digits now, 101.95. It's been down 9% for a while, basically pretty much at the day's lowest level. So that and more coming up through the course of the next 1 hour. Ekta, morning.
Hi Prashant, absolutely, and a lot of other stocks in focus as well. So Ambuja and ACC continue to be in focus. We are now seeing Ambuja down around 4% on the Nifty space, so it's the top loser right now. And besides that, we have a lot of other stocks. You did mention PNB. And we have something like a Simphaoli Sugar, which has bounced back today. So that stock is up around 10% and something like Graphite India, which is doing quite well as well, post a brokerage report. So that stock is up around 5% at this point in time. But it seems as though it is still quite precarious for a lot of the banks. So we have State Bank of India, which is down 1.7%, Axis, which is down 1.6% at this point from the Nifty space, ICICI also, which is just about testing its 50-day moving average. But we do have Sudarshan Sukhani with us to discuss technicals of the market at this point. So Sudarshan, over to you then. One, what would you recommend on the Nifty with the Nifty at 10,570 as well as your stocks?
Yeah, good morning again. See, the Nifty recommendation is very simple. Do not trade the indices. In the morning, I said exit or long positions because in spite of the big US market rally, the Nifty itself is coming very strongly at a resistance level. That is the 10,620, 10,650 resistance zone. That zone will be difficult to cross in one day, and that's exactly what's happened. At this point, the Nifty could chop around for a couple of days or even more before the market decides whether it wants to cross that resistance or whether it simply wants to be in a trading range. So there is no trade in the Nifty and the Nifty Bank. Individual stocks will keep on offering opportunities. For the day, I have Balkrishna Industries as a short sell. That stock had a handsome rally, but that rally is now going into a correction. It has been a relatively weak performer even in this 3-day up move. So, but please remember, all trades are for only intraday. Balkrishna is a short sell. There are two buying opportunities, both as it happens in the FMCG sector, which is doing well today. The first is Unilever, where a buy is suggested, and the second is Marico. Here also, because overnight markets can do anything, I would suggest taking only intraday trades.
So Balkrishna Industries, Lever, Marico. Balkrishna is a sell, HUL and Marico are buys. We got some questions coming your way, Sudarshan, so let's address those. Sumit has 200 shares in Lupin. He's paid 1,050 rupees each for them. He wants to know whether to hold, average or sell here. Lupin paid 1,050. What would you tell him?
Don't average, but just hold on. See, the worst is probably over for the stock. Now, if you are a long-term investor, you have to be patient for the long term. That's exactly what long-term traders, investors do. Don't panic. Eventually, you'll get money out of this trade, but it will take some time. So just hold on.
Okay, we have one more, Sudarshan. Dinesh, 2,000 shares of Vakrangi at 408, wants to know the view.
Wait, I don't know what to say. Tell me, how will he sell? It's very difficult. I wish I could help him, but he should get out of it. That's all I can say. And I don't know how that will happen.
Right.
Okay.
Okay, so I think Vakrangi got locked down today.
Yeah.
5% up. So that's no liquidity and lots of sellers in line. 171, what a fall from those dizzy heights Vakaranji's had for a long time now. Thanks very much, Sudarshan. We will speak with you soon again. Appreciate your time and advice. Let's get some F&O strategies. Shubham Agarwal is with us from QAPP Securities. Shubham, morning. What would you trade?
Yeah, good morning, Prashant. As Sudarshan said that 10,650 is an important resistance, and there doesn't exist a trade right now. But as an option trader, we do have an edge that if we feel that the Nifty might either go up or might go down, that's also a valid forecast to go and trade in options. So with that view, I recommend to trade a strap on Nifty. So this strategy is generally the one where we go and trade volatility in Nifty, and even if the Nifty goes up or it goes down, we make money. The only thing is that it should not stay at the same point, and that is where we lose. So the recommendation would be to buy 2 lots of 10,700 call at 84 rupees and buy 1 lot of 10,700 put around 200 rupees. The overall strategy profit that we are looking for is 5,000 rupees, and the stop loss has to be maintained at 2,500, and the view holds good for about a week. The second strategy would be on Allahabad Bank, where we do see that most of the mid-cap banks are under selling pressure, and we feel that that should continue. So with that view, Allahabad Bank should see some more downside in the coming weeks. And with that, recommendation would be to buy a 47.5 put option at 1.35. The second leg would be to buy a 50 rupees put option at 2 rupees, and to fund this, we recommend to sell a 52.5 put option at 2.7. So overall, what will happen is that we have a very minimum outflow in this strategy, and the overall profit remains open. So the profit expectation would be 26,000 rupees in the strategy level, and a stop loss has to be maintained at 9,000 rupees. The third strategy would be IBUL Housing Finance, where it's a very simple one. We have to just go and buy a put of 1280 strike at 37 rupees. The target would be 55, and the stop loss has to be maintained at 28.
Okay, all right, Shubham. Thanks very much for bringing us all of those strategies from the F&O space. Well, for the markets, at around just 11 points lower for the Nifty. So it's been a bit choppy. We're off the day's high, but we're off the day's low as well. And the Bank Nifty is currently underperforming, down around 0.7%. But Prashant, you're moving away from banks and looking at the entire oil marketing space.
Yes, and the reason I'm doing that is because stocks have, actually corrected. So I was looking at BPCL, it's down 20-odd% from its all-time high. High was 550, it's at about 480. IOC high was 460 at about 380. So basically, roughly 20-25% cuts from their all-time peaks. What's happened is that oil prices have corrected. They were at $70. They've come off a long way from those levels. Of course, there is no certainty whether they will move up or move down, but the fact is they have corrected. But retail fuel prices have not seen a similar correction. There's a very obvious reason for that. It's essentially because costing is done on a fortnightly rolling average basis. So retail fuel prices will reflect what's happening in globally and the Indian basket of crude at some point, because the way the costing is done. Because of this, what's happened is that implied retail fuel margins are basically at multi-month highs. And I think we'd be able to confirm this with oil marketing companies, and we can maybe speak with them later in the show and later in the day. But they are enjoying margins which may be the highest since the daily pricing was introduced for retail fuel. So I just wanted to sort of highlight this, given the backdrop of the sharp underperformance we've seen in oil marketing companies relative to other sectors or the Nifty, etc. Of course, the big risk and the big talking point still is, with so many state elections and generally this being a politically charged year ahead of the general elections next year, if and that's a big if, global prices were to spike up sharply again, will the government allow a pass-through, etc.? So far, there has been absolutely no problem. So it's just a risk which gets talked about, but it's not really materialized, per se, at this point in time. So watch that space, and maybe we'll have a perspective from an oil marketing company themselves on the matter.
We have a couple of stocks which are gaining at this point. So Hindustan Unilever is doing quite well. That stock is up around 1.5%. We have Bharti Airtel. It's been a rank underperformer this year with a loss of around 19-odd%, but it's seeing some amount of buying today. So that stock is up around 1.2%. And a couple of the other stocks, say something like a Reliance, not doing too badly as well. So that stock is up around 1-odd%. Some amount of participation coming in from select IT stocks. So TCS as well as HCL Tech are up anywhere between 0.5% to 1-odd%. at this point in time. But that's what's happening with the markets at this point. Let's get in what's happening in the commodity and currency space. We have Manisha Gupta joining in to tell us more. Manisha.
Ekta, thank you so much for that. Well, let's talk about the agro commodities, because remember, in the recent few days, we've seen lots being talked about that. A lot of steps and reforms also have been taken by the government to ensure that the commodity prices are supported, because we did see them decline much below the MSP price as well. So while we have seen action come in for sugar, pulses, it seems like the government is now looking to increase import duty for wheat as well. It currently stands at 20%, and this is to discourage cheap imports, also support the domestic markets. Not that India really imports a lot of wheat, but remember, a lot of steps that have been taken in the recent time have more to do with sentiment rather than anything else. Arrivals in the Indian markets in the meanwhile have been picking up, are expected to gain further momentum after the Holi weekend, and the government in the meanwhile also is holding quite a strong buffer stock. A quick word on the international markets, and the wheat prices there are trading at a 7-month highs, as there are planting concerns we saw in US, in Russia, India, European Union, etc. And that tells you that the global wheat crop this time around could be the smallest in last 6 years, and that has been supporting those prices. But Kunal Shah of Nirmal Bang now joins us to talk more about those commodities. Kunal, hi, good to have you. What is your sense now on the agro commodities? Because it's wheat on radar. There are meetings this week, and we hear something actually might go through on this one. We don't really import so much of wheat. So what is really your sense? Much of sentiment driven rather than actual surge or gain?
Yes, much of sentiment driven, number one, like you rightly pointed. But the fact is that the government emphasis to double the farm income, and the government's announcement that they are going to buy a lot of these agro commodities, may it be grains, may it be pulses from the market, in order to support the farmers. I think the trend is on the up move. Internationally, the weather has been bad in South America. The weather has been bad in Russia. Weather has been bad in US. So considering all this, we believe that the international wheat prices are likely to go up, and hence the domestic prices are also likely to catch up. So the trend is definitely seems to be on the upside rather than any major downside from here.
And would you say the same thing about the industrial metals as well? Because that is something that has been on a rise as well. The China import data, the kind of move that we have seen, especially coming for steel prices, do you see it spilling over to the rest of base metals?
Yes, in base metal also we are going to discuss about nickel today. Nickel import numbers for the month of January has been absolutely mind-boggling. I mean, we've seen more than 25% growth in nickel imports from China. So we believe this commodity is likely to shoot up further. So it's all the restocking demand of batteries, e-batteries, and because of that, a lot of producers are stocking nickel in advance. So I think that nickel can go up from here, 890, good levels to go long for the upside target of 910, 915, and on the long-term basis, it can test levels of 1,000 rupees.
Kunal, there's plenty data coming in this week as well, from US GDP numbers to the US non-farm payroll data, Jeremy Powell's statement today, and then of course there's plenty happening in China as well in sense of numbers there. What would you watch out for, and any strategy that you would take on from there?
I think I would watch out for anything which essentially weakens the dollar and lowers the bond yield. So I think that if we are going to see a dovish statement by Powell, then I think definitely we are going to see some more buying coming into commodities. But the inflation is picking up in US, and because of that, we believe that any decline in commodities is a good buying opportunity. The overall trend definitely seems to be on the upside for the metals and other commodities.
Does that give you enough impetus to go long in gold as well?
Gold, yes, it's. I think we are most bullish on gold for the entire year and for the next year also. The uncertainty over the monetary policy is one of the major reasons why one should go long. The rising fiscal deficit of the US, that is also one of the major reasons one should go long in gold. And we expect this year central bank buying to resume aggressively during the second half of the year. So gold looks very attractive from the short term, medium term, long term, all perspective. We are going to see gold trading at $1,600 by the end of this year.
Okay, thanks very much, Kunal, Manisha. Appreciate both of you coming in with a quick wrap of what's happening in commodities. We'll take a very quick break. We come back, we discuss market technicals as always. Ashwini Gujral should be with us ready. The market is recovering a little bit, maybe just 8 points lower, 9 points lower. So we were down a little over 10, not really a recovery, but it's been quiet and flat after this big 250 odd point move that we've had over the last 3 odd trading sessions. There is a news on Mercator, stocks up 5%. I think that's the daily circuit on it. I missed what the news was. DGH has approved field development plan for some oil discoveries for Mercator. So that is what is coming through on that stock. We should try and have the company join us on the phone line to talk about it. Okay, I was wrong. So before we took that break, I read out news on Mercator. Mercator essentially announced to the exchanges that the DGH, that's the Director General of Hydrocarbons, has approved the field development plan for what could be 23 million barrels of recoverable oil in a field. Mr. Shalabh Mittal is Managing Director and CEO at the company, at Mercator. Mr. Mittal, thanks very much for joining us. Could you just put this in perspective? What does this mean, and what would this imply really?
Well, this is a very exciting development for the company. So we've invested last few years on developing this oil well. So this was one of the last approvals we needed to start the trial production, and which will eventually lead to commercial production. So the government, DGH, has formally approved the field development plan, which means that they've approved the way we're going to develop the field, the plan, the production planning, and so on and so forth. Post which we can start the trial production immediately, which is targeted for March this year.
Is this a oil? Sorry, this is a field oil well. What is this, and where is this?
Yeah, so these are oil fields in onshore Gujarat in Cambay Basin.
Okay.
It's a very prospective area. We've been doing the drilling for the last 1 year, more than 1 year. The discovery was, of course, made last year.
Right.
It will go through a whole lot of approvals from the DGH. Now the government has formally approved the production plan.
So what is the potential of the oil fields?
So oil field is much larger. These two wells, we're talking about only 2 wells here, Jyoti 1, Jyoti 2. The recoverable barrels we're talking about, the government has approved a production plan of 23 million barrels, while the third-party estimate is in excess of 26 million barrels.
Okay. And you don't have a partner in this?
No, government is the biggest partner, so it's 100% operated by us.
Okay. So what kind of potential are we working with, say, in terms of revenue when it comes to commercial production, and when you envisaging that? And for trial production, do you get any sort of service charges at all?
Yeah, trial production is basically small level of production, but yes, that whatever we produce would be sold as well. So there would be revenues for that, but of course at a small level. Commercial production, we are targeting anything between middle of this year, calendar year.
And what's the revenue potential?
See, revenue potential, of course, right now the oil prices are high. These 2 wells have a potential of, we can ramp up the production up to 5,000-6,000 barrels a day. Of course, that will take time. And, being onshore oil wells, the production cost is very, very low. I can't give you the exact numbers, but it's a fairly profitable venture for us.
You said government is the biggest partner, so I mean, you split this with them?
Yeah, so there is a revenue share as per the production sharing plan, where government gets about 70%.
Gets about 70% of what it's sold at. Okay, so now there is no other approval needed. You can go and basically take the oil out, right?
No, so for trial production, we can start immediately.
Right.
We would still need a few approvals on site, which is more of a formality which we are already taking care of.
Okay. And you said, so you have licensed over more wells, I mean, in the field there? So these are 2 wells we're talking about. And
2 wells.
What's the status on the others? I mean, if you could tell us what's the scope there in these fields?
Yeah, so the overall oil field, so these are 2 wells. We are now drilling the 8th well.
Okay.
As we said in our announcement, we also are testing the 6th well. So 6th well also looks prospective. Of course, we know the results only once we formally test it. And those results will be out by April. So in the 6th and the 8th well and the subsequent wells, if we find more reserves, that will add to the 23 million barrel reserves we're talking about right now.
Okay. You had approved some restructuring, I think, in the quarter gone by. Is that linked to your oil and gas business at all?
No, that's not. So we currently have 4 businesses, shipping, dredging, oil and gas, and coal mining. What we approved in the last board meeting was a vertical split to get the dredging business out of the main co. Okay.
So the listed company that we're talking about right now will have your shipping business, your oil and gas business, and your dredging business. I think you have plans of relisting it.
That's right. It will be a vertical split, where on the split it will be a separate listed company.
Mr. Midal, thanks very much. Appreciate you joining us and good luck. So that is essentially Mercator with plans on 2 wells. They said they're working on the 6th and the 8th well in the Cambay Basin where these 2 wells are located. Potential is 23 million barrels. 70% of the revenue as per the agreement with the government goes to the government. And there is a bit about the corporate structure at Mercator as well. Stock was up 5.5. It's come off a little bit, about 4.75% higher. We'll take, okay, I think we have Ashwini with us. So let's go straight across to him, 11:30. For his view on the market. Ashwini, thanks very much. 8 points lower on the Nifty. So just your sense, your reading of the screen.
See, this could be the last call for the bears to cover. I mean, 10,630, 650 was the upper end of the range. If the bears can hardly take it down 8 points, then I think they are in trouble. So my sense is that slowly the market will recover. Even financials, even PSU banks are seeing some sort of short covering. So I think the bulls are going to rampage through 10,630, 650. In fact, we've given buy calls on Bank Nifty, Nifty as well as calls. This appears to be like a minor dip, and chances are it'll get gobbled up fairly quickly, maybe by today afternoon. Having said that, JSW Steel is a buy with a stop of 314, target of 328. Petronet LNG is a buy with a stop of 242, target of 256. And Avenue Supermart is a buy with a stop of 1300, target of 1365.
Banks, Ashwini?
See, banks, this is a decline or a small dip post, a large rally. So even here, Bank Nifty with the stop around the low of the day, I think can be easily bought. And banks is what is going to lead the market higher. The private banks, PSUs will kind of languish around and they can be ignored. But all the private banks where you are getting those declines, they should be used to buy.
Fair enough. Let's get some Twitter queries to you. We have Dhananjay who's writing in 6,000 shares of Motherson. He owns at 346 rupees each. He wants to know the long-term view on the stock. I think you've liked Motherson for a while now. Ashwini.
Yeah, Motherson is a fantastic company. He should have added to his position when it went lower. I think long-term, I think 500 could be a target. Long-term means 2 to 3 years. So 500 is a decent target. Recent lows about 305 can be held on as a stop. But in such stocks, I don't think stops, etc. are relevant. But still, as a risk management, you can have a 300 rupee type of stop and look for targets of 500.
Okay, and we have Shivam who has 200 shares of Emami at 1250. Wants to know the view on the stock, Ashwini. Emami.
See, Emami, FMCG space, that overall has done well, but you need to have a modest sort of expectations. For the last 3 odd years, it's been in a range of 980 and 1360. So as long as you are closer to 980, 1000 on your buy, you'll probably get 1350, 1360 back. So it's kind of a range-bound type stock.
Ashwini, thanks very much. Appreciate you joining us with that perspective and that advice. 5 points. So now almost coming back into the green. The Nifty, that is, 10,577 is where we are at. So, things are looking up, I think, a little bit. Canfin Homes at the bottom of your screen. I think you had Lupin, which was coming up a little bit. look at something like a Bharti, which is perked up. It's up about 1.5%. When we started, you had Idea, which was
point
higher
out
as well.
Dr. Reddy's as well, because that's actually surged to the high point of the day. It's up around 1.8%. There's been so much negative news with regards to the Srikakulam EIR, which has that official action indicated status. But I think that maybe there is some amount of buying which is coming in at lower levels now, because year to date, however, that stock is still relatively better than some of its peers. So it's down 7.5%. But today, it's showing some amount of traction.